All right, still the start, but you always say it's 9 o'clock. It's got to be 9:30.
No, I actually said it now. It's 9:30 to 10 p.m. in the AI party. That goes to 4 a.m.
All right, so you have a number of upgrades in the space, specifically in the software space when it comes to AI. One of them is Snowflake. The other one's actually Elastic. We've been fortunate enough to have the CEO on the show. Kind of a broad-based play. They do cloud, they do security as well. Why these two names?
Look, I think, and we've talked about a lot here on the show, now the second derivative, the software piece of AI is here. I think in 2025, that's going to be the key. You look at Elastic, Snowflake, names like MongoDB, they're the ones now that follow names like Palantir in terms of the software, the use cases. I believe the software AI age is now here. 2025, that's going to be front and center. 5, 7, 8 billion per quarter. That was just ultimately many thought it could just be a few billion.
Dan Ives highlights that the AI revolution is just beginning, with Nvidia leading the charge. For every dollar spent on Nvidia chips, there's a significant ripple effect across tech sectors like software and cybersecurity. This early momentum, fueled by regulatory changes and enterprise adoption, points to a transformative era for AI. Nvidia's future hinges on its Blackwell chip, with revenue projections varying widely, creating uncertainty and potential stock volatility. Investors are watching how demand unfolds and its impact on Nvidia's growth trajectory in the AI space. For option strategies, Nvidia's cooled volatility favors moderate bullish plays, while Tesla's higher volatility allows for conservative approaches like put spread. Both companies remain pivotal in shaping the AI and EV landscape.
Actually, give us the word of the day today. What is it and why?
Fire. Because I think this is a tech market that's going to be on fire, not just for going into the end of the year this week, but what I believe right now, this AI revolution, it's hitting its next phase. And I think this is just still the start of a fourth industrial revolution.
More on Broadcom, which has been, I'd say, our late stage FOMO, really dominant name, is Diane King-Hall, senior markets correspondent for the network. And so, Diane, what a few sessions we have seen, frankly, in Broadcom shares. I mean, it has been phenomenal to watch. It's honestly buoyed a lot of the overall weakness we've seen in the rest of semis and some of these AI type winners. But I mean, objectively, having a phenomenal year. And so walk us through some of the analyst noise today.
Yeah, so Morgan Stanley is out with some commentary within the sector, and one of the things that stood out is obviously their commentary on Broadcom. So shares are moving about 4% higher off the back of some of this bullish and upbeat assessment that we're seeing with regard to Broadcom. They've raised their price target on Broadcom to $265 a share. They previously had a price target of $233 a share. They are maintaining an overweight rating on the stock, and they just talked about the potential within the AI growth story for Broadcom. Where Broadcom has been benefiting, I should say, is from the growth within ASIC, the application-specific integrated circuit, that kind of chip, versus the GPUs that Nvidia is known for. As the AI story grows and extrapolates and more companies need alternatives, this is where Broadcom can come in. So some companies are looking at it as an alternative to the GPUs. Part of it is because the cost of those chips the GPUs are just more expensive than the ASIC. So that's one vantage point. And then the way it processes information, so that could be a beneficiary. It's been known for having these three big players. It's got three heavyweights as its customers. We're talking about Alphabet, Meta, and ByteDance. But there have been recent reports and analyst commentary saying they are reportedly working with Apple on their own AI chip. And that's been one of the conversations we've been having about potential market share coming away from Nvidia, for instance, as other companies develop their own AI-specific chips. So another thing that stood out to me, Morgan Stanley says, while they don't expect ASICs to gain share in 2025, they have enthusiasm longer term. So they believe that it has the design capabilities and the long-term trajectory is there for a Broadcom. And they say overall, because this was a note just about across kind of industry, the industry view remains attractive as AI strength now dominates the index weightings and other areas are bottoming out slowly. So again, we are seeing shares move higher today, Jenny, not at the high that we saw at the beginning of this week, but there's still time in today's session.
Diane, I was looking at kind of valuation. So many of the names we've talked about recently have seen valuations swell astronomically over the last year. And Broadcom's not an exception. It has, of course, seen its valuation increase, but it might be warranted. I mean, we're looking at a stock that kind of perennially traded around 15 to 20 times forward earnings, but it was a little bit more of a consistent, almost value-like company, an Apple supplier, if you will. Well, now we're talking about an AI growth company with completely different fundamentals. I don't think it is probably making analysts all that uncomfortable to see valuation now at 35 times earnings, and the fact that it came down after its last earnings event from a high near 40.
So as this all plays out and you start to look at numbers over the next, call it 12 to 18 months, the godfather of AI, Jensen, Nvidia, continue to be in that Mount Rushmore, and it just shows. It's starting with Nvidia, now second, third, fourth derivatives playing out. That's why it's 9:30, 10 p.m. in this AI party. Prize piece. We're talking about something that could ultimately be billions of revenue. So when you actually look at what this means, $75, you're like, oh, it's expensive. I look out 3-4 years from now, could Palantir be the next Oracle? The next Salesforce, the next SAP. That's what I think we're talking about. And that's why, look, the bears will come out of hibernation, talk about valuation.
And other areas that are regulators. Does that help either one of these names, or are they neutral to that?
Well, I think it's actually bullish, because in our view, with Khan going to be out, FTC, this is going to be significant in terms of deal making. I think these are companies that are going to go on the offensive. And then on the other hand, you're just going to have massive M&A from strategic as well as on the financial M&A side. And that's why software has underperformed. But if you look in 2025, I think a year from now, we sit here and we're like, software is fire. Because this is just the start of what I view. 9:30, 10 p.m. is the AI revolution. We're talking about $2 trillion of AI capex. Now software, they were on the velvet ropes behind Nvidia, Microsoft, the hyperscalers. Software is like, let us into the party. Party's here.
The party's here.
Let's move on to Nvidia, a report from The Information detailing how Nvidia could build a cloud business that would rival the likes of Amazon Web Services. The chipmaker says it could generate $150 billion in revenue from software and cloud services in the long run. CEO Jensen Huang has said that cloud and AI software will be a very significant business over time, and the company is on pace to generate $2 billion annually from selling just software. If they did expand into the cloud business, that could be a huge headwind for Amazon, which has been the cloud giant in the room for so many years here. I believe Amazon Web Services makes up nearly 20% of Amazon's overall revenue, and a significant portion of that is in the cloud. They've had this sort of co-opetition relationship with Nvidia, so if they do start to eat their lunch, I can't wait to see the claws come
But
out.
Amazon wants to build its own AI chips, right? And eventually maybe not buy as many Nvidia chips. So it's interesting to see that kind of push and pull. And the other thing here, Maddie, that just fascinates me about this story is kind of the classic investor story of how a company grows as they give you a product, right? So Nvidia has built these very successful AI chips. Everyone wants them. How does Nvidia follow the customer through that journey, right? You think about Apple and iPhone, right? Apple gave us all of these great products. What did they eventually build out that's now one of the largest parts of their business? The services business, right? They continue to sell you things once you use the product and sort of go through that customer journey with you. Nvidia's AI chips are a lot more complicated and a lot more B2B and a little bit different than that. But to me, I think it's a fair comparison to think about, okay, everyone bought our chips. How do we become a part of the next version of AI? We were talking earlier last hour about how there's sort of this shift from the infrastructure to what do we do with this? Cloud services is a huge, huge part of that next step. If Nvidia can actually eventually generate $150 billion in revenue off of this, then you start to talk about, okay, maybe AI chip demand isn't the entire part of the investor story, because I think for the large part of the last 18 months, it's been, well, what about when everyone has enough chips, right? And that's all the discussion's been. Maybe the discussion starts to shift a little bit if we continue to hear more about this on coming earnings calls.
And $150 billion, I believe AWS gets about $100 billion from its cloud business. So that would be them saying also, we think we're going to beat the biggest guy in the room here too, which is interesting moving forward. I just think it'll be fascinating to see. Nvidia, to your point, has kind of revolutionized itself multiple times already. They started as a video game chip maker. Now they're this AI giant. Will they also become a huge cloud player? They've got a lot of competition. So we'll see if they can pull it out.
They have a lot of competition in a lot of different spaces, right?
Yeah.
So if you have that chip competition that we've been talking about over the last couple of weeks, maybe your solution is to zag a little bit and have other sources of revenue that can also pick up. So certainly not a tomorrow story, I wouldn't say, but something that is important to track, especially if you're considering holding Nvidia over the long run. The movement past that chip story into other sources of revenue could be rather.
The AI revolution is just beginning, with Nvidia leading the charge through its transformative chips, driving growth across tech sectors like software and cybersecurity. Regulatory support and next-gen innovations, like the Blackwell chip, hint at significant opportunities despite some market uncertainty. Similarly, Tesla's Cybertruck is poised to be a game-changer, with sales expected to triple next year, while its futuristic robotech remains speculative. Both companies offer exciting investment potential through innovation and evolving market strategies. Will Nvidia maintain its AI leadership as competitors emerge? Can the Cybertruck truly redefine Tesla's growth trajectory?